Welcome to today's discussion. We're diving into the Simplify Gold Strategy Plus Income ETF, ticker symbol YGLD. It's a fascinating approach to gold investing, and we have an expert here to unpack it for us.
Indeed. YGLD offers a unique blend of gold exposure and income generation, unlike traditional gold ETFs.
Right, it's not just about holding gold, it's about leveraging its potential and generating income simultaneously. What's the core strategy behind this?
The core is a 150% exposure to gold futures, aiming for capital appreciation, combined with an options overlay strategy designed to produce quarterly income.
150% exposure, that sounds quite leveraged. What are the implications of that?
It's a capital efficient way to gain significant gold exposure, but it also amplifies both gains and losses.
Let's talk about that 150% gold exposure. How is that achieved, and how does the quarterly rebalancing work?
The fund invests in gold futures contracts traded on the COMEX. The rebalancing to 150% exposure happens quarterly, meaning the actual exposure might fluctuate within the quarter depending on gold price movements.
So it's not a perfectly constant 150%, but a target that's adjusted every 3 months. Does this frequent rebalancing have any advantages?
Yes, it helps mitigate the volatility drag often seen in daily rebalanced funds. Daily adjustments can lead to higher transaction costs and erode returns.
Now let's delve into the options overlay. You mentioned it generates income. How does that work exactly?
Primarily, it involves selling put spreads on various underlying assets, equities, fixed income, and commodity indices, or ETFs. This strategy generates income from the premiums received.
Selling put spreads, can you explain that for our listeners who might not be familiar with options trading?
A put spread involves selling an out-of-the-money put option while simultaneously buying a further out-of-the-money put option as a hedge. It limits potential losses while generating income from the premium difference.
I see. So it's a defined risk strategy that aims for consistent income generation. How does this compare to other gold plus income strategies?
Unlike covered call funds, which cap potential upside gains, this strategy allows for unlimited upside potential while providing a regular income stream.
The fund's inception was December 2nd, 2024. What can you tell us about its early performance?
The fund underperformed its benchmark, the Selective Gold Spot Index, in its first quarter. This was primarily due to volatility in the options overlay, influenced by Federal Reserve comments, and the slightly negative movement in gold prices.
So the options overlay, while intended to generate income, can also contribute to volatility. What are the key risks associated with investing in YGLD?
The significant risks include leverage risk from the 150% gold exposure, the risks inherent in options trading, including the potential loss of the entire premium, and the risks associated with futures contracts, such as contango and backwardation. Credit risk and prepayment risk from fixed income holdings are also factors.
It sounds like a relatively complex investment with a higher than average risk profile. Is it suitable for all investors?
Absolutely not. It's crucial for potential investors to understand these risks and assess their own risk tolerance before investing. This is not a low-risk investment.
Let's look at some of the fund's details. What's the expense ratio?
The gross expense ratio is 0.50%.
And what about the top holdings as of December 31st, 2024?
The largest holding is GCG 5 Compom, gold futures, reflecting the 149.41% notional exposure to gold. A significant portion is also allocated to treasury bills, providing liquidity and mitigating some risk. There are also small positions in various put options.
So a mix of gold futures, short-term government bonds, and options positions. It's a diversified approach within the context of its gold-focused strategy. Before we wrap up, let's clarify some key terms. What exactly is a notional exposure?
Notional exposure represents the total market exposure a derivatives contract provides, accounting for leverage. In this case, it shows the amplified gold exposure.
Right. And what about the SEC 30-day yield?
That's a standardized measure of the fund's net investment income over a 30-day period, annualized. It's a way to gauge the income-generating potential.
Are there any other important points investors should consider?
Yes, the fund is actively managed, meaning its performance depends heavily on the investment decisions of the fund manager. Past performance is not indicative of future results. Investors should carefully review the prospectus before investing.
And what about tax implications?
The fund avoids K-1 tax forms, which is a benefit for many investors.
Who would be the ideal investor for YGLD?
Investors with a higher risk tolerance, seeking both gold exposure and income generation, and who understand the complexities of leveraged investments and option strategies. It's not for the average risk averse investor.
How does YGLD compare to other gold ETFs on the market?
Many gold ETFs simply track the price of gold. YGLD differentiates itself by offering leverage exposure and an income generating component, making it a more active and potentially higher return, but also higher risk alternative.
What's your outlook for YGLD in the coming months and years?
The fund's performance will depend on several factors, including gold prices, interest rates, and the effectiveness of the options overlay strategy. It's difficult to predict with certainty, but the strategy aims for long-term growth and income generation.
It's important to reiterate that this discussion is for informational purposes only and does not constitute investment advice.
Absolutely. Investors should conduct their own thorough research and consult with the financial advisor before making any investment decisions.
Where can listeners find more information about YGLD?
They can visit simplifyetfs.com for the prospectus and other relevant documents.
This has been a very insightful discussion. Thank you for clarifying the complexities of YGLD and its investment strategy.
You're welcome. I hope this has been helpful.
It certainly has. The key takeaways are the fund's unique approach to gold investing, the importance of understanding the risks involved, and the need for thorough due diligence before investing.
Precisely.
Thank you again for your expertise. That was a great discussion.